Good morning, everybody. I'm delighted to see such a big crowd on such a hot topic of regulation. I thought I'd have to close the doors. Um, Delighted to be here this morning. And my name is Gillian Lynch. I'm CEO for Europe for Gemini. And we are here this morning to discuss a very hot topic, a new milestone regulation that has come into play in Europe, the MiCA regulation, market in crypto assets. It's a milestone because Europe is leading the way in providing some clarity around regulation. So it's leading globally. Before I kick off, we'll do some just brief introductions to my panelists. So I'll start on my left. Sudhu.
Hey, good to be here, Gillian. Hi, everyone. My name is Sudhu Arumugam, and I'm the Chief Product Officer at M2, which is an Abu Dhabi-based and regulated exchange.
Philipp.
Hi, it's great to be here. I'm VP of Regulatory and Public Affairs at Bitpanda, and we rock the crypto world.
Marina.
Hi, I'm Marina Villalonga, partner at Asensi Abogados, a Spanish law firm specialized in regulatory and compliance, especially for digital assets and blockchain.
Hello, I'm Ana Carolina. I am the Chief Compliance Officer at Venga. We are right now in our process to MiCA, so it will be a pleasure to talk to you today.
And finally, Eric.
Hi guys, pleasure to be here. I'm Eric. I'm Managing Director of Crypto Finance in Germany. We are a crypto broker and custodian, so offer institutional investors and banks the infrastructure and the access to the market. Regulated in Switzerland and Germany now, so also right in the middle of the MiCA license upgrade process.
Thanks, guys. And as you can see, it's a very diverse panel. So we're going to get stuck in. And as a starter, we'll just have a little chat about, like, for us sitting on the panel, we're living and breathing MiCA at the moment. So I think it might be a really good starting point. And maybe, Eric, you can chat to us a little bit about what you think the impact or implications for you and your company are for MiCA.
Yes, and I think a lot of people also on the stage and in the audience are actually working on the same topic now. So for the companies that are already regulated, they have to, of course, get a MiCA license, and it's not just them. I think it's a lot of companies who are not regulated at the moment who need to become MiCA compliant and get a license. And of course, MiCA is a pretty nice thing. It has a lot of benefits. If you are located in one of the EU member states, you can use this license for offering your services across the whole EU. So it has a pretty big benefit. But it also comes, of course, with a lot of work. I mean, at the moment, a lot of companies are struggling and trying to find a way how to become MiCA compliant, and there are different ways to do that. Mainly, there are three different ways, actually. Either you can, if you are not regulated yet, go through the normal licensing process and get a MiCA license. If you are already regulated in one of the member states, you can use the so-called simplified procedure, where you basically just have to fill in the gaps of your local regulator and MiCA, which should hopefully not take too long. That's also what we are at the moment doing. And the third group is basically MiFID institutes in the EU who can then notify into MiCA, which is it's still not a walk in the park, but you can get it in a bit more structured and shorter way. The regulator also has some timeframes until when they have to approve these licenses. For us, since we are already regulated, we are in the simplified procedure, so we are at the moment filling the gaps. We have also submitted already documents and policies and so on to the regulator, so we are almost there, I would say. But to just mention this, for a lot of companies, it's going to be really a lot of work and a lot of stuff to do. So if a new company, for example, wants to enter this space and wants to become MiCA compliant, it's a lot. So there are a lot of benefits, but it's also a lot of work.
Yeah, I suppose for those that may not be as au fait with MiCA, you won't be able to offer crypto services in Europe beyond mid-2026 unless you are MiCA compliant. So I think Eric was outlining it's a mammoth task. And I think, Anna, we were talking earlier about some of the challenges in that particularly if you're a small company. So I think it might be useful just to give a sense of, proportionality and
Yeah.
how, if you're a smaller company, how do you approach actually becoming MiCA compliant?
Sure. Because when we start looking at MiCA, this is a massive piece of regulation that brings together not only tech compliance, but also financial markets compliance. So when we look at this massive piece, we need to think that this regulation is not the native language of tech companies. So we need to adapt. When we need to put very big and complex worlds together. It's like this huge part of regulation and also the innovation and the technology. So we have some challenges in terms of how do you make this compliance effective? You're not hitting the brakes all the time of the development and innovation. And at the same time, you also are in the situation of warning your tech team about their wonderful and creative ideas that may imply some risks now that we are all applying for MiCA, and we want to be compliant with this regulation because we want to create companies to last. So my point of view right now, like either you like it or not, MiCA, if you want to create a crypto asset service provider, they are going to last and they're going to have the trust of the users in Europe, you need to comply very much with this, with all those steps. And in my point of view, as a compliance officer, I cannot be neutral on that. I would say that onboarding the right people is the key. And having a compliance team that are on board with you and they are listened by the product team is I think it would be helpful for the innovation and will also help to get this MiCA license for good, right?
Yeah, I agree. I think that when we're engaging with regulators, it's important to show that you mean business and that you have a team of substance. I think starting out from a position where you're kind of trying to get away with a minimal amount, sometimes you spend 2 years trying to get the regulator comfortable. I think if we talk about the topic of the panel itself, much is spoken about MiCA, and is it the silver bullet? Do we think that it will drive adoption? Philip, I'll hand over to you maybe, and then open it to the wider panel as well.
Thank you. I would like to start to go a little bit on the last question on what MiCA does. And I would like to go one step back and say, for me, MiCA is a transformation and transformation of a company and an industry. When we go back and think about what the industry has started with, and I seeing like the little speedboats that really kind of raced to somewhere. But now the speedboats got bigger, heavier, and now you need a different steering, you need a different governance. And if you go on and take this regulation not as something what you just have to comply with, but think about why people think that this makes sense for your company to be, then you see the sense of it, because then you see, yes, you cannot steer a large fleet, a large tanker the same way as a little speedboat. And this is where we're coming there. And this is all going to be a race to the top. And is it going to be the silver bullet? And I want to go back there. That really depends on your business. If you really believe your business is a small speedboat business, then maybe it is more difficult to be there because you will need processes that will hinder you in some cases because we want the trust of the people and everybody wants to have you think about it. But if you are a player who really wants to work with bigger institutionals, with the financial industry, then this interaction will be the silver bullet. Because what Bitpanda has in there, our corporations with Deutsche Bank, with LBBW, and with many others, is they care for regulation. Because that's the world they know and understand, and then they integrate with you. So this is where you come in a silver bullet. And for the other parts, we need to just transform ourselves and see where do we are able to build a B2C market that has one level playing field and is fair, where not like players from outside Europe, out European footprint, are going in a market direction that doesn't work in there. So going there, it really depends on your market size. If you really want to work with the industry, if you really want to work on a good high scale target, then it can be a silver bullet. But it also depends a little bit more on what the rest of the world is going to do. But this, I think, is another question.
It is. And thanks, Philip. And interested to see if any of the panel think that we'll see consolidation as a result, or people leaving the market because the regulatory burden or hurdle is too high.
Just one thing, absolutely. I want to go back and see. I've been now in the industry for too many years. And for that, I was in the financial industry. And when MiFID I was coming, that was the same thing. Every time when a regulation comes in, what the European regulator very clearly then says, you need to have a minimum size. I don't agree with this approach. And I think in many cases, the US firms and US regulation makes it cleverer by having a better proportionality to be able for firms to grow to a certain size. In Europe, we don't like that. As regulators, they say basically, okay, you have to do everything. And the worst thing they usually do is they then put somewhere in there, oh, you can work with proportionality. So the smallest firm with the least capacity now has to explain to the regulator why their approach is still proportional. That doesn't work. That's research-wise. If you would need to do it different, we really should go and see what does other do. Either have clear limits where firms are able to grow until they pass that and then have the size to go in there, or really define proportionality on a policy level and not as something you as a small firm have to explain. I am Bitpanda, I can explain things to my regulator, but that is because I have the best experts. I have experts in many countries. I have money to get legal advice. I can do that. But the next firm with a couple of employees who starts, how are they going to have this know-how?
Maybe.
Hey, Gillian, yeah, I just want to add, it's an interesting question around consolidation, because if you look at the UAE, where we're regulated out of, they put their virtual assets regulations out back in 2018. And I think, I know I'm biased, but I think it's very, very clear what's expected of firms, both from an administrative and operational perspective. And so what we've seen is actually the reverse, i.e. huge growth in digital assets businesses coming in. And so I think it's not so much proportionality, but clarity. I think that it's both important.
Yeah, I agree. Sorry, Eric. Yeah, work ahead.
Proportionality is actually there's a lot to discuss, because I completely agree. The big players, the big players that come out of MiFID and so on, it's not completely new to them, and a lot of stuff is already there, and you know how to deal with this stuff. And especially when you're a company, also like Bitpanda and ourselves, who target really institutions and banks and so on, this regulatory certainty is wanted, and is actually, the last years it has been used as a very big excuse of a lot of big firms to not enter the market into crypto, because they said, oh, we don't have regulatory certainty. Well, now you have regulatory certainty, so it actually helps the market to really develop. And I think we really see a next stage in Europe, and it's one of the, from next year, and it's one of the very few examples where we are actually ahead of the US, which is nice, but we also have to really make use of it, because we all know that in the US things can also, maybe also even in November, change quite quickly, and then other regions can pick up, and then the advantage we have here and we are creating now here can be also gone again. So for these companies and so in this space, it's fine. But I completely agree, the proportionality for small firms, and it's not just MiCA, it's DORA coming up, it's DEC 8 coming up for tax. So we are also a bit at risk at the moment to really drown the small companies and hinder actually the innovation, because I think in a standardized product and so on, we have a good framework for MiCA to bring the market really forward. But the small companies, the regulation really can also hinder the innovative factor. And when we think 1 or 2 years or 3 years ahead, that could also be negative in the end. Now, if we don't have proportionality and really kick out these firms out of Europe because they cannot keep up with the regulation.
If I could add,
pointing out about proportionality and small companies and startups, because we don't have to forget that there are plenty of startups and small and medium-sized companies that are trying to be compliant with MiCA. They don't have the internal resources as big companies, so they need to put a lot of time, staff, resources, money by trying to be compliant. Maybe they don't have enough resources to be totally compliant. They are not like financial institutions, banks with huge amounts of resources. This is one of the challenges we have to face with MiCA, but there are many more. For example, the national regulators are still learning with us. I mean, they are as new as we are. And when we go to them, we answer them whatever we need to question. They say, okay, I'm not sure, I don't know. Let's wait for ESMA's opinion, or let's wait for interpretations. So there's
Very much so. We're still learning because
there's a great point of uncertainty here. So
so we have clarity, but we're still getting a lot of opinions. So we're learning as we go along. And even though we have to be compliant by latest mid 2026, it's interesting. Very few regulators have opened their application process yet. So there's a lot of engagement to come yet.
That's
definitely.
it. And in fact, there are so many interpretative issues in MiCA regulations that we don't know how to deal with. For example, matters regarding reverse solicitations, public offers, sustainability. Exchanges will need to indicate the environmental impact of the tokens they are listing, but how do we do this? Or for tokens that are about to be issued, okay, they will include this information in the white paper, but for tokens that are already listed, how we know the environmental impact? I mean, these are the little things that we don't know how to manage right now. And for example, in Spain, the Spanish regulator issued some guidelines in July, and it's okay, it's a great start point, but of course, it leads to an enormous and huge amount of questions, and we have to deal with this. That's the issue.
Maybe if I just want to chip in, especially for the smaller entities, I think the one thing that we need to consider, and that these entities need more to consider, is more ways of collaboration, be it on a technical level, be it on different assets. We worked with some of them to really be able to provide them IT infrastructure and IT things. Not everybody has to build everything on their own. And I think that's something, a way forward. For a lot of these firms will say, okay, I want to be in the MiCA space. I have a good business, but I will not be able to scale large enough to do it all myself. So let's find partners like Bitpanda or others who can say, okay, what do you need to still sustain a good business without going in there? And the last thing I really like is about the regulators. I think it's also an opportunity for us, and I see them very receptive when we go to regulators and say, hey, I know this is open, this is an opinion we have, this would be thing in there. They take this usually very, very seriously, and we are able to, I think, really lead that there. But what this also means that we still need maybe more cooperation between the industry, that we have more one voice going in there and have a leadership position.
Yeah, I agree. I think regulators definitely, in the last couple of years, they're more welcoming for us to go in and have discussions. And most regulators have innovation hubs now, and they do welcome people coming in. But I think, to your point, Philip, as an industry, we're probably not as cohesive as we should be in terms of really tackling the material interpretations.
Absolutely. One thing I want to add to that, and sometimes we are not as, let's say, we don't use the same language we should. And in the MiCA process, in some cases, how the industry did lobbying was not good. And I would just kind of say, because we use the way we are used to communicate, and honestly, you can't work MEPs and commissions like that. You need to speak their language. And that is something where we really also need to grow up a little more and not think that writing them 100,000 of emails is gonna solve everything. That's not there. We are now part of the larger industry, and we need to act that way.
And just switching slightly, so I think a lot of us in the crypto world just think about crypto companies and things about ourselves. But I think when MiCA comes into play, it'll be interesting to see how banks operate. Banks will more than likely become MiCA compliant as well. Eric, maybe because a lot of us have TradFi backgrounds, so I'm very interested to see how banks will come to play in the crypto space or what they would do.
I think banks play a very crucial role going forward. Maybe even the most crucial role, to be honest, because I think there's still a very a big hidden potential of clients who just enter the crypto space if their beloved bank is offering something. Yeah, I think there is still a big potential, but not just on the retail side, also on the institutional sides. I mean, banks also need to enable this asset class because they very often act as prime brokers for asset managers and so on. So they have a very crucial role for the retail and also the institutional adoption. And I think a lot of what we see actually in the client calls and meetings we have, that a lot of the big banks are going for own infrastructure and they really approach it, and they have projects to really offer crypto to their clients next year. But we also talk to a lot of smaller banks who basically think now, oh, nice, there's a regulatory framework, we can just notify because we have a bank license, it's not a big deal, we just do it. And sometimes we have to ground them and say, no, it's not like this. I mean, if you don't have the processes and so on, notification doesn't mean that you can just fill out a form, hand it in, and say, okay, from tomorrow I'm doing crypto custody or something. It's a lot of work. It's a lot of work of integrating the technology, of doing a new product process internally, adjusting all the frameworks from risk, compliance, you name it, everything. So it is a big deal, and I completely agree with Philipp here. And I'm not so sure if I like the direction where it's heading at the moment when I have these client talks, because it seems like everyone thinks now, okay, it's easy to go into MiCA. So we are going into MiCA and we do our completely own infrastructure setup, our own tech, we do everything by ourselves, which is not a good direction when we think about the post-trading environment in Europe. Because in the traditional space, we already have a very fragmented post-trading landscape compared to the US, and that hinders the market massively on the European level. If now every bank is trying to build an own infrastructure and have a own custody solution, own processes and so on, you end up in a super, super fragmented post-trading environment that is not efficient at all, which hinders us further down the road massively. Yeah? Because in the end, every bank has to have a business case for offering this asset class. And this business case is just basically there when you have also the efficiency that blockchain sometimes promises. And at the moment, it looks a bit like everyone wants to do it by themselves, which is, I think, not a good direction. So what we also always advise, especially smaller banks, because there are some big banks where it completely makes sense that they build their own tech and so on if they have the scales. But for a lot of banks, they don't choose the right approach of doing it by themselves. They should rather really use and choose a partner wisely, basically, to cooperate with them, like Bitpanda or also us here. And that comes back also to the question you had before, a bit of consolidation. I think further down the road, there will be massive consolidation on the post-trading side, because it doesn't make sense to have daily alignment process between 20 custodians, having thousands of on-chain transactions that make also the whole setup more unsafe and so on. So I don't like at the moment the direction that it's looking like for the next year and how some banks approach it. And I think further down the road, there will be consolidation on this space. But banks play a massive role under MiCA now.
May I just add to that? I think sometimes the complexities are not seen. Not only custody, AML, how to do on-chain kind of real proof of funds, that there are so many things in there that are very, very different. And the one thing I'll then always tend to tell is, banks have not been used to be really being robbed in the past anymore, because luckily that isn't happening anymore. But your crypto, that can be stolen. And that is a whole different deal. You need to really be very, very differently ready for that. And I feel like, and that's the whole DORA system, for me shows that they are not as far operationally. Yes, they will be better and kind of writing down the little fields the regulator asks, but operationally in security, I think we are far before them.
We're all living and breathing and in the middle of doing MiCA work. I wouldn't mind asking each of you, what's the one thing that would keep you awake at night, that would worry you about MiCA, that, or an uncertainty that you're grappling with? Anna, start with Anna maybe.
That's a good question. I have like a long list of things that are keeping me awake at night when I think about MiCA. But with the legal background, I think it's the implications of when we think about creating a CASP right now, it's almost like creating a small bank. So, what do you need to have in place? And how do you take this huge list of policies that you need to develop and implement? And you work, you're not working on a solid ground. The ground is constantly moving because it's evolving. We are listening to the ESMA guidelines, and then we go back to the ESMA guidelines with all the hunger in the world, like, well, I'm going to find all the answers, but it's still not there. So what I would say is like, it is very good to have like the three pillars of MiCA, like notification, licensing, regulation. We will need to comply with all those lists of policies before applying for the licensing, before even knowing that we are going to be operative in the due time. And then we need to deal also from a legal point of view with the complexities of each policy that MiCA is demanding. We have experience on the anti-money laundering policies because we are dealing with that from the past 5 years. We know already that we need to have the same kind of risk approach banking system from the anti-money laundering in the case of crypto. But now with MiCA, we will have like the prudential safeguards, insurance. We will need to adopt a business continuity policy that is very much intertwined with DORA requirements. And it's not possible to have a business continuity policy like a regular company. It's like, oh, if I have COVID, if I have a catastrophe. No, I need to think about a solid ICT security system and to have it implemented internally as well. I need to have complaints handling policy. I need to have whistleblowing policies. But what does whistleblowing has to do with crypto asset service providers? Well, a lot right now because we want to create this trust from the users that we are developing a safe environment for the customers' funds. So we also need to implement all the security for the custody of customer funds and segregation of funds. So when we look at this long list of policies, I want to highlight to the audience here that please don't go to a law firm, buy a paper, and keep this paper in your drawer, because this is going to leave you in dark waters in the future. Because the challenge and the interesting thing for MiCA is to take these policies, understand your product, and understand how you're going to make these controls and these procedures alive in your day-to-day basis. Like how you're going to talk to your team and make them understand that security systems, it's not only keeping your record safe in some place in your office in Barcelona or on your office in Frankfurt. And we also need to be very sure that we need to ensure that your top management, the board, understand these policies, and we need to share with them the risk approach, because we are dealing. You mentioned proportionality at the beginning, and what I would like to add to the proportionality discussion is that we need to go back to the anti-money laundering thinking and think about risk-based approach. Of course, we cannot develop this whole list of policies in their integrity being a team that it's just starting. But we need to explain our risks, and we need to explain how we are going to prevent those risks implementing the policies we had.
I think that
I would like to point out something
Yep.
else, because from the law firm perspective, I totally agree with you. In fact, we need to know exactly what the client's business is about. We need to draft the policies, test them, correct them. It's a lot of time implementing everything. And at the end of the day, it's not only about MiCA, it's about anti-money laundering, it's about DORA, it's about travel rule, it's about many, many compliance rules, regulatory regulations that we need to follow. So, I mean, the compliance department is gaining an increasingly important role in the company. I mean, it's
Yeah.
key. It's
I
a
think
key
that,
point.
And we still need
definitely.
the reportings. After all of that, we still need to go back to regulators and report
Yeah,
on
that's it,
ESG,
that's it.
on tax, anti-money laundering, suspicious activity reports. In the case of Spain, we need to report to the tax authority about the amount of funds that the user is transferring along the year. So
So I think what the audience are getting a sense of is the regulatory burden, and it's akin to actually being a bank, being honest. And I think it's a realistic view of what MiCA means. It's not a tick box exercise; it's quite onerous, and I think that that's what Anna and Philip. I think maybe you might like to add a little bit.
I honestly, all of this is true, but it doesn't keep me up at night. And the reason for that is not only because we have amazing experts and we do it. What keeps me up at night is two things. First of all, we do all this, and this produces cost and burden. But are everybody in the market going to have the same? Or are we still going to have players from the outside we cannot protect ourselves in? Because that is a real market problem when we don't have this level playing field. We do all of these things, and suddenly somebody comes in, it's an open internet website, people go in there and buy it. The second is, well, I always tell the regulators, we can't say no. I accept governance, I accept work, but I cannot ban users from getting products they get on other platforms, because that will drive them away. Think about any utility of any service. When you have to say no, clients want it, they find a different way, and that goes a little bit to the first one. The less I protect my market and I have to say no to my clients, you don't get this here, then this is a problem. We do the work, it's hard, but what keeps me up at night, if we lose these two things, the European market is dead.
I think it's a very good point. I think for a lot of you here on the panel, you guys are exchanges and platforms already in Europe. When you look at it as M2 coming, how do we position ourselves to offer our services in Europe? And if we do, the interesting thing for us is not, okay, yeah, we need to report tax. We have no idea how to do that because we don't do it anywhere else. And, separating it, and that's an operational administrative headache. But fundamentally for us is how do we enter Europe and where do we do it? And for us, we're looking at, do we look at a partnership model? Do we look at a direct model? We're speaking to a partner in Germany regulated by BaFin. We're speaking to someone in Cyprus, Slovenia as well. And of course, every one of them's like, yeah, we can do it super fast for you. Come with us. Is that true? What does super fast mean? And so, we have a different set of problems to those that are already here.
And I think one of the challenges is, and I think you've touched on it, one is we talked about proportionality, but the other one is consistency. And I think the biggest challenge will be, will each regulator apply MiCA in a consistent way? To your point, Sudhu, that you're shopping almost at the moment, and you're hearing, I can get it fast here, I can get it faster there. And I think the biggest challenge will be for regulators and for ESMA and the supervisors is consistency, so that if you apply in one jurisdiction, that it's the same measurement that you're going to be measured by if you apply somewhere else.
Yeah, especially when you add derivatives. So we have derivatives and spot, and I'm not sure, for some of the other exchanges is spot only, which is maybe clearer, maybe not. But when you combine MiFID and MiCA, now it gets super confusing.
And that's not even to layer things like DORA And so the regulatory overhead is huge. But from what you're hearing, Sudhu, are you, at the moment, are you going to, and would you think that companies thinking of coming into Europe are going to sit and wait or investigate and say, well, I might as well bite the bullet, even?
Yeah, no, I don't think we can sit and wait. I think that time has passed. And I also think that, we looked at Ireland, for example, and where you guys are from, and I think that's an 18-month process at least. And so I don't think two things. I don't think we can sit and wait as exchanges if we want to offer services in Europe. And secondly, it has to be a partnership model with the existing regulated entity, because otherwise it's just way too long and too complex.
In terms of, and I know we touched on it earlier, the competitive advantage, and I think, Eric, you touched on it earlier. Europe has an opportunity at the moment because we do have regulatory clarity. It's not perfect, but we have a good idea as to what the guardrails are. That doesn't exist in a lot of regions. Do you think that other regions will follow suit, or how do you think they will follow suit? Like, look at the States, it's kind of regulation by enforcement at the moment.
I do think they follow, because we also hear from other people talking about this from other jurisdictions outside of the EU that a lot of regulators are actually waiting for MiCA to be completely final, and there's still some RTSs and so not completely final yet. And they will use this most likely as a blueprint, because when you look at it holistically, and it was said before, yes, there is a reason why the regulator wants certain things, because of learnings from the traditional world and also new learnings from the crypto world and the FTX stuff that was happening in the past. So there is a reason. So I think a lot of regulators outside of the EU will also look at this and use this as a blueprint. Question is a bit, do they go a bit softer? I would expect some jurisdictions to go a bit softer, because sometimes it's just too much. I mean, when you, for example, look at data recording in MiCA, it's completely copied from MiFID, and there the regulator tells you exactly how you have to report, which fields you have to fill, which data format, and so on. That's too much. I mean, a lot of other jurisdictions will probably not follow. But I think also the US, they will catch up on this. Yeah? If they use exactly MiCA as blueprint in the US, I'm not sure. But once they allow also their banks to enter this space, they will enter it fast. I mean, the US banks all have projects in their drawer, and they know how to address the market as soon as they are allowed to. So they will speed up quite fast. Yeah.
Maybe just to add to that, first of all, I think it's extremely exciting that this industry is even part of the election topic. Think about back what this means for this industry. And whatever the outcome is, it will be on the topic there to do something. And on the regulation part, I would have a simple solution. Use MiCA, but not level 2. Honestly, MiCA, the core text, does most of these things quite right. It just started with the level 2 texts, where they just copied things out of other regulations, even though when they weren't there. So even though MiCA level 1 didn't have a connection to record keeping, they decided just in level 2, well, you still need it, and very, very detailed. So going this direction will be interesting. What I also like is that a lot of marketplaces, not only US, are going there. I think Dubai is a great example of where they start going more and more this regulated route and find those things that make sense, like market abuse. I think we all can agree that this is an important topic to get solved and to have a clean market out there. So yes, it's quite exciting and good from my perspective.
And what do you think that Dubai got right, Sudhu, when you were, like, they had clarity early on as well, and they got significant investment from key players in the market. What did they do right that maybe the EU could learn from?
I think it was a couple of things they got right. One was, Abu Dhabi as well, but it's that it was a centralized venue that you could kind of, a simple thing as a website with forms and the to-do list before you can even approach them, I think was one. And the other thing was they gave banks confidence to bank crypto firms. Now, it still isn't perfect because there are different regulators. There's VARA in Dubai, the FSRA in Abu Dhabi, global markets, and then the central bank is a separate. Now, if you look at Bahrain, for example, that's a good example, I think, for me, of how I'd like to see regulation, because the regulator regulates both crypto businesses and the banks. So the banks have no fear because it's the parent regulator. But I think this is what the region is doing right there. Whereas, even with coming into Europe, I mean, we're getting a client money bank account, and we have no idea how to do this.
On a practical basis, that's one of the biggest challenges any crypto, and I'm sure people in the audience that have been trying to set up getting a bank account is so hard to do, such a basic piece. And I know when we had chats with Dubai, it was part of their process that they introduced you to banks. Anna, or sorry, Marina. Apologies.
In fact, about the bank accounts, last week that I was on Singapore and I had the opportunity to talk with some colleagues from all over the world, we made like a round table commenting on how difficult it was to opening a bank account for exchanges or for caps. And it turns out that Europe is the best place to do it because, yeah. It's so complicated. This is a problem that we are sharing all across the world. In every jurisdiction, they are worried about the same. And it seemed that like Europe was one of the less complicated. So yeah, we are struggling with this. I just wanted to point it out that we share this problem.
It's a global issue, very much.
Yeah, it's a global issue. That's it.
I would like to add just something that popped up in my mind, because, I come from Brazil. So when we look at the market, the crypto market there, like in Brazil, Argentina, Venezuela, they don't have regulation yet, but they are a big market. And what happened in those countries is usually that they don't implement the law, but they take it as best practices in the compliance. So I think that when we look at the US, maybe they will create their own way of regulating, putting people in jail, electing somebody else for the SEC. But I would bet my coins that we would have the Latin American market looking very closely to Europe and adopting MiCA, even though if it's not a law, but as best practices in compliance to approach the European market and have European customers.
Interesting. And I know we're coming towards the end of our time. I think maybe to look less at the regulatory aspects and more on the business side. So we have our regulatory clarity. So whether we like it or not, we know what the guardrails are. If you were giving advice, so what's the one piece that you would be focusing on in your business to try and grow adoption, to grow your business? What's the priority now, assuming that MiCA is, and all our regulatory hurdles are tackled? Eric, do you want to start?
For me, it's partnerships, but Philipp, you were probably saying the same. For me, it's really partnerships because it doesn't make sense for the clients to start with the most difficult piece. And the most difficult piece is, like I said, building on infrastructure and getting the license approval for this. And because that is the hardest piece, but still a lot of clients, a lot of banks and so on start with the hardest piece, and that just doesn't make sense. Yeah, that we need to actually use the time to have a transition period, and I would advise everyone to do so, because otherwise we will lose at some point the advantage we have now with MiCA in the European market. And I think it's a great chance. And even though we also mentioned a lot of negative aspects about, well, a lot of challenging aspects about MiCA, it's still good. I mean, for us, for example, as a company, we of course didn't want to set up shop in 20 plus different EU countries and get licenses there. No one wants that. And there we have a massive chance here. So it's overall really, really good development here, but we really have to make use of it. And that is really by doing partnerships from my point of view.
Philipp?
I think our new slogan, when crypto then Bitpanda, and I think this is going to very much the core integration and partnerships. We don't need 20, 30, hundreds of firms trying to do the same. We need this consolidated, and not only because for the singular firms who will make useless investments, but also very much for as a European market. Look, we have the opportunity to have the biggest market unified with one license systems. Let's use this and create strong European home firms that have a competitive possibility in the world. And I think that's the thing we're going in there. And last but not least, let's champion the European market from European players. And if we are able to do that, I think we have won enough.
Thanks, Philip. And Sudhu, for you coming into or looking at Europe as an investment proposition, why would you look at Europe? What's attractive about it?
Yeah, well, for us, it's I think our thesis is very much if you look at exchanges and CASPs, if you look at it sort of trading volume versus assets under management, you look at Asia is very strong in trading coins, particularly the weirder esoteric ones. If you look at Europe, for us, it's very much around the earn product and investment products, and so it's Germany, France, Spain, for example, along with South America, these are areas that we're looking at, particularly because our flagship products, the earn product, and everything that we can find within Europe that makes it simple and understandable, not just for the venue, but also for the end customer. Can they stake? What are they allowed to do and not allowed to do, and what are the rules around it? I think it's the key to growing the market, because I think Europe is much more mature. People will like to, like the yields that come from there, from these products, and how do they touch it, operate with it, and benefit from it.
And I think that even though we've gone through a very difficult time in crypto, a difficult crypto winter, even in a survey that we did in Gemini, it showed that in the last 2 years, we're growing to now 1 in 4 or 1 in 5 now hold crypto. So I think we're seeing huge growth in adoption. So I think the opportunity is huge. And I think there's and the EU has a huge part to play in growth globally. Anything in terms of South America? Do you see crypto adoption growing in South America or?
A lot.
Yeah.
A lot. I saw the statistics this morning, putting Brazil as the third or fourth main areas for adoption. We have Venezuela. We have so much political instability there that you see people really learning how to use crypto to keep this your money value safe. So I would say go for that.
I've been told by Oisin that I think our time has come to an end. Thank you, and thanks to everybody for staying for what sometimes regulation can mean that people leave the room. So thank you for everybody, and thank you to the panel as well for the time and consideration given to all the topics. Thanks, guys.
Thank you.
Thank you.